Next week is a pivotal week in the markets, and I want to discuss and maybe prep us a little bit for what is coming. Next week, we have the return of T-Man, aka Donald Trump, taking his second presidential administration. And I don't know if you guys saw that mugshot. Maybe Chandler could, or not mugshot, his official picture. Chandler, could you show a picture of that for us? You can see he looks like he's mimicking his mugshot picture, which is, I don't know, kind of an interesting one. Not the traditional president, but we knew Donald Trump never was the traditional president. That being said, I want to discuss a little bit about markets, what's going on right now. We do see some interesting news also out of the cryptocurrency side of things. Actually, I believe we might see it right here. Bitcoin chases 103,000 on Trump plans to make crypto a national priority. And this has kind of been the rumor, but it seems like that's still on his radar. And I think Bitcoin is jumping due to that. My initial entry here so far is looking really good. Let's hope that this does continue. I'm looking for a break and close above this level in order to trail a stop and move it further into profit. This has been a trade that we shared inside of our Discord room. Here's a look at the trade alert that I shared on this Bitcoin trade. And by the way, I should mention that today is the last day to get our 30% off discount on the VIP service. You can see every trade that I'm taking, as well as the rest of our analyst team here at A1 Trading. We share all of our trades with entries, stop loss levels, and analysis. This allows traders who are looking to improve their trading to watch alongside what we're doing, and more importantly, why we're doing it, so that you can learn something about why we trade the way we do. If that's something you're interested, I would encourage you to take advantage of that discount before it ends. And a little special shout out here with the last day. If you send us a direct message on our website on a1trading.com, send us a DM on there. There's a live chat box in the bottom right hand of the screen, or we'll leave it linked in the description down below. We'll give you an extra 5% off as a subscriber to the YouTube channel. So Bitcoin's continuing to run, and we have a bounce in the NASDAQ here this morning. Earnings have been coming out overall relatively strong here for the US, and that earnings, as well as maybe the fear, anxiety, excitedness, etc. around Trump taking office next week may have the market kind of resuming some of the optimism rally that they had following Trump's kind of a victory back here. Now, whether you like Trump or not, this is not, I'm not trying to get political here or not, but the stock market itself tends to like pro-business policies. And whether you agree with low taxes for businesses or not, the point is the stock market likes it, regardless of whether you like or dislike Trump. Just want to make that distinction because this is not a political channel whatsoever, but it is important to acknowledge politicians as they make fiscal policy decisions that really impact the markets that we trade and love. The S&P 500 is still on here for me. This is another trade I shared inside of our room. I'm looking for a breakout here of this 6,000 level. If we can get back above that, I'm going to look to start taking my stop loss, which is still in the potential loss territory, and actually start looking for a chance to move it higher. I actually love that yesterday we had a little bit of a breather move on the S&P 500. You can see big up day on CPI day, a little bit of a pullback, and if we can get some nice follow through today, depending on how this candle closes, I may get a chance to actually trail my stop and move it further into profit. The Dow Jones also recapturing this area of resistance around 43,400. Love to see that, and I would love to see a break and close above here today for the Dow Jones. That would be very positive signal that we may actually have found a bottom here around that 42,000 level. And the Russell doing the very same thing. I have a bullish position on the Russell right now, so I would really be happy to see a strong close here. Last time we had a weak close, right? A little bit of a wicked candle, saw a bit of a follow through move, and now let's see if we can actually close above and stay strong around this 2280 level. And yesterday I went out on a whim saying I don't like the upside story for gold right now, and we'll see how this plays out. This thing could continue to drift higher. I'm just kind of not trading it at this time, but I pointed out that US data has been very strong recently, and that's kind of a bearish catalyst for gold. That being said, there's also geopolitical risk that is still around the corner, with Russia and the US still kind of placing sanctions on each other and uncertainty there. I'm not a fan of shorting gold, but I'm also not very interested in being bullish either. For me to get bullish, what I'd be looking for is a weaker US dollar off of the idea that we're getting some weaker US numbers that would start to get interesting. Like if we saw jobs data weekend, that would be more interesting to me. And of course, if I take a trade, I'll share it inside of Discord. Here's a look at our current top setups on the Edge Finder. We're still getting confirmation on the Bitcoin idea, the NASDAQ idea, the S&P idea, some of the things that I discussed already in today's video. So I am staying convicted on those ideas that I currently already have. And just because I mentioned the US economic data just a second ago and why I am still kind of cautious on gold bullishness is because look how solid most of these numbers are for the US economy. And a lot of blue here signals the idea that risk on assets most likely can continue to perform, at least the way I view this stuff. We had some questions, what does the blue versus the red mean from some of our customers who use our software? And I need to kind of condense this text. This is a lot of text, I'm gonna reduce it. But the idea here being actually that blue just means that it's more favorable towards risk on, right? Cooling inflation, strong growth, strong jobs data, that stuff is good for risk on assets like stocks, crypto, etc. And conversely, not as good for things like gold, which thrive typically in a period where gold, cash, government treasuries, right, things like that perform well in a risk-off environment where the economy is faltering, inflation is, coming down, and the Fed can cut rates dramatically. That's an environment where I want to be more favorable towards gold. But right now, I'm going to continue to stay where I am seeing results, right? I'm trading the indices recently. I'm trading Bitcoin, and there's been nice movement on these things and plenty of opportunity. So for me, there is opportunity cost to focusing on gold when I could be taking a look at Bitcoin, which is ripping almost 3% today, right? So of course this could change, but I like the prospect of trading Bitcoin way more than trading gold. And again, there are times where I love trading gold and I stay far away from stock indices and things like that. That needle changes, right? The needle changes directions over time. So I want to stay with what is working and with what makes sense with my systematic approach using the Edge Finder. By the way, if you're interested in trying out the Edge Finder, a link in the description down below can be used to apply for a 30-day trial. Those trials are not free. They're $199 to try it for 30 days. If that's something that you're interested in applying for, the link is in the description. The dollar index continues to hold this trend line that we've been discussing here, and things like euro dollar, pound dollar, Kiwi dollar, Aussie dollar, pretty much everything against the dollar continues to really struggle to gain any ground. Here's the dollar Swiss franc. I've actually been looking for an opportunity to get long once more on this one, but still going to try and wait for that 0.91 level, let's call it, or not 91, I'm sorry, 9.01 or so, right? So right around this area, I'd be interested in trying out another long position on dollar Swiss, but for now, no entry for me. And today I'm headed down to Florida for a bachelor/bachelorette joint party. So I won't be on stream today, but what we'll do here is we'll play a quick clip from today's live stream that my editor thought was especially useful. Check it out.
And somebody had asked a question about the big drop. You always look at Friday moves. You kind of discount Friday moves. We call it Freaky Friday, where, it's manic Monday, turnaround Tuesday, wow Wednesday, fabulous Thursday, right? And then Friday is freaky, kind of like, because everyone goes home, right? They get the 3-day weekend, so things kind of like we get pullbacks. But there's no doubt that we have a very strong bullish trend on the dollar index, and with but nothing moves in a straight line. I'm using Heikin-Ashi candles, and Heikin-Ashi candles really streamline my analysis. I'm really a visual person. Green is up, red is down. So it's very clear that this is an uptrend. I don't have to, you don't have to be a brain surgeon or a PhD to figure that one out, right? However, if you drop down to smaller time frames, you can see that within this uptrend, we have some pullbacks, and these pullbacks are profit-taking opportunities in the market, right? And that's what the dollar controls. The DXY controls the major currency pairs, right? So if you learn how to trade the dollar, you know how to trade everything else, right? And then we can look at the euro, it's the anti-dollar, right? So we get a high of about the 110.21 that we had on the 13th, and it's in the back of higher interest rates. We had a CPI report that was warmer than expected, and the chances of further rate cuts seem to have decreased. Instead of having 2 or 3 rate cuts, We're looking for possibly maybe one rate cut or no rate cuts. And there's even talk that there might be a rate hike because of the strong, robust jobs market. The jobs market, the NFP number came out stronger than expected. And we also had the inflation, stubborn kind of sticky inflation. So with that, interest rates are the biggest drivers of currency rates, and so we could possibly see 6% on the 10-year Treasury, and that could be the spell doom and gloom for the market. Market does not like expensive money. Borrowing costs go up, that usually hurts the market. Okay, so we can see this. We have a nice uptrend with a pullback here on the daily chart. Go down to the 4-hour chart. We can see even more of a pullback, but stabilization along this trend line that's been going on for, well, God knows how long, since the pandemic lows, right? So what does that mean for the other currency pairs? And in the past, usually a rising dollar would hurt the the equity market, but the equity market is quite strong. So what we got here, we can look at you flip this upside down and you look at the euro as the anti-dollar, right? And so we can go to the euro, and we can see that every time we pull back in the dollar, we've seen rises. So we have in a trend, we're taking a break. We got a nice little pullback against the trend. Breathe in, breathe out, breathe in, breathe out. So the price goes up and pulls back. We've got wonderful opportunities for probably on Tuesday for another rally in the dollar. My favorite pair to trade this is the dollar CAD. But let's flip this around and look at the euro dollar, which is the anti-dollar. And we can see just the opposite. And it makes it very clear. Now, the US dollar is the big dog, and it's the reserve currency of the world. And we can see that as interest rates go up, we have a strong economy. There's lots of excitement about the new administration coming in. And so other currencies are taking a backseat. They might get little rallies along the way. Nothing goes down in a straight line, but we're going to see this group of currency pairs moving together at the same time. I see someone that just put in NZD, USD, and that's one of the pairs I love to trade too. But if we can see, starting back, walking it back from a weekly chart, this is just blood red, just falling off the cliff after peaking out about the 1219 area. We broke the 200 simple moving average, and we've just been breaking support levels after support level. And now we're probably aiming toward the 2022 lows or 2023 lows here, right? So that looks like our target, right? And so look at this chart. Well, look at this chart. Look at the euro. I'm going to go through these others, and they're going to look pretty much the same. Why? Because it's EUR, USD, the base currency, and we can see that the similar pattern in the Aussie dollar, except notice how Aussie is a little bit more advanced. It's already reached the low already. And I look at the Aussie dollar and Kiwi dollar are like time travelers. They seem to be ahead of the game, ahead of the pound dollar and the other currency pairs. I don't know if it's just that part of the world, because they start their day earlier, or they're ahead of us. But you notice that we're already at the low. But if we went back to the euro, we haven't reached that yet. So the Aussie is almost telling us what's going to happen with the going forward, right? That we could see that eventually we might see the euro come back and test this low of 95.21, which was the October low.
If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, 8cap. 8cap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your 8cap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out 8cap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.